Well, good morning, everybody. I promised corporate taxes after personal tax season. We're close to the end of May, already into June. So the first thing I'm going to cover right now from a First Nations perspective is understanding the GST, HST in Canada and navigating tax exemptions for First Nations. Okay, so what we're going to talk about, we're going to do an overview of GST, HST, because we also have the First Nations GST, and we have First Nations taxation in Canada, right? So we're going to talk about the exemptions. We're going to talk about the challenges and issues that we as First Nations face, and government policies and support. We're going to just look at a case study and some practical applications. Very simple. So what is GST, HST? Most of us know what that is. In British Columbia, we have GST. We don't have HST. The harmonized sales tax is more towards Central Eastern Canada. We do have First Nations GST, and that's where First Nations take over their GST themselves. And we have First Nations taxation, self-governing First Nations, and those who register for it. So tax, again, in a First Nations concept, this is how I've broken it down. We've got three categories of First Nations for purposes of taxation in Canada. We have the original Treaty Indians, Treaty 1 to Treaty 11, I believe now. We have rights and titles, the Chilcotin case in 2014, which my community, Lower Similkameen Indian Band, were rights and titles. And then we have self-governing First Nations, an example, Westbank First Nation, Tawasin First Nation. We've got this new self-governing First Nations coming out. Like, the tax implications are different for everybody, and the tax implications for all First Nations in Canada is changing so rapidly, it's very hard to keep up. So just a quick definition of GST, or First Nations GST, or First Nations tax. It's basically a value-added tax. There's the Revenue Canada Guide 4022 that applies to everybody, not to just to First Nations, okay? And value-added is like, it's not a consumption tax. Like provincial sales tax is a consumption tax. We don't get to claim it back. GST is value added, you claim it back, it goes to the next person down the line. So First Nations GST, goods and services tax, it's 5% still in British Columbia. And the guide for First Nations goods and services tax is RC 4365. So this tax is imposed by a band council, or other governing body of a First Nation, a tribal council, Indian band lands, that it governs, and it applies to most supplies of property and services. So in other words, First Nations have taken over their own taxes. Why does Revenue Canada administer it? Because we haven't built the framework for that. So it's an easy transition, okay? It does not apply to the sales on First Nations Indian bands or lands, unless, of course, they've signed away that administrative right. And in their self-government process, the same rules as GST. It does not apply to zero rate or exempt supplies, medical supplies, that sort of thing. And Canada Revenue Agency, as I said, administers the First Nations GST because we haven't the capacity to build that framework. So it might be referred to by a different name in the First Nations bylaws. For example, Westbank First Nation has a community improvement fee of 5%. And it applies on the reserve where the First Nations tax applies, because what they do, they use that to build their infrastructure. Everyone pays on listed products. Certain provincial, territorial governments don't pay, okay? So lists of products refers to alcoholic beverage, fuel, and tobacco identified in the bylaw, to which it might not apply because there's a different taxation system in place there. All right? So this is right from Canada Revenue Agency. This is called the Schedule 1. This is the list of names of First Nations and governing bodies, the description of their lands that, will be, perhaps this will tell you, are they charging, are they First Nations GST? Are they First Nations taxation? What are they? In this case, it's First Nations goods and taxation. as we see right here. Okay, so you kind of want to look at this and find out, say, if you're visiting somewhere. For example, in Toronto, they have a point of sales rebate. And so when I have my status card, if I go to Toronto, I'm doing business or whatever, I get to buy goods, not all goods, that are tax exempt because they have a point of sale rebate. So again, it differs province to province and nation to nation in some cases. And here's First Nations that impose the FNT. This is the First Nations taxation. So there we go, West Bank, British Columbia, alcohol beverages, 1999, fuel, 1999, and tobacco products. So this is First Nations taxation. It's different than the FNGST. The FNGST, the First Nations GST, does not apply to First Nations taxation to Kamloops or Secwepemc, British Columbia. All these, Adams Lake, Cowichan, Little Shuswap. So I put the link here where you can go and find out. Okay, are they First Nations GST? Are they First Nations taxation? It's important to know because I helped a business in Williams Lake doing a business with First Nations, and Canada Revenue Agency came along and wanted to impose a huge GST bill on them. And I had to demonstrate and prepare for Canada Revenue Agency that it was a wash in the end of the day. It was on fuel. Okay, so really, it's really important to know because the financial consequences can be very significant. So First Nations and tax exemptions. Okay, so basically our understanding for most of us is Section 87 of the Indian Act gives us that basis for tax exemption. So what happens if you're outside the Indian Act, then what? Well, the eligibility changes, right? Like if you're self-governing and you've signed an administration agreement, well, with Revenue Canada and those rights, then it doesn't apply. This is the way that many of us First Nations were writing ourselves out of the Indian Act because it's, a pretty archaic piece of legislation. And we're writing it out through self-governing agreements, impact benefit agreements. We're negotiating tax agreements with at the provincial level, the federal level. It's changing. So the legal basis for tax exemptions outside of Canada. So this is the website here where Canada Revenue Agency, who has tax administration agreements under the FNGST, okay, personal tax, we're not going to talk about that now, First Nations sales tax, and tax treatment agreements. Here's Tawasin. It's changing fast. And read the administration agreement. Sometimes it exempts the personal taxation and for taxation altogether. Sometimes it doesn't. It depends on the individual nations, their needs, and the easiest way for them to administer themselves. So we have self-government agreements. We have membership control agreements under Section 10 of the Indian Act, meaning bands can accept their own members. We're not relying on the government to do it as per Section 11 of the Indian Act. So we've got the First Nations oil and gas monies management. Apologies for that little N in there. I know there's just so many agreements. Then we have the First Nations Lands Management Act. So if we decide to go outside of the Indian Act, we have to get certification through these First Nations governing bodies. It's like a third level of government, like you have Canada, you have the province, and then you have a municipal government. Well, then you have a First Nations management government, okay? Impact benefit agreements, as I said, like for mining or for, how they'll pay the health, how they're going to negotiate their lands. The Chilcotin case, an agreement with the province of British Columbia when they won the rights and titles case. We have the tax administration agreements and the tax treatment agreements. There's a lot to digest. And if you don't understand, you want to see your tax specialist because it could have significant consequences. So goods and services eligible for the exemptions, okay? The products on reserve typically, okay? You're zero rated, of course, like health and medical supplies, that sort of thing, okay? And maybe resources. You have to check community by community. And services to First Nations can also be exempt from tax, okay? Enhancing access to necessary services. So documentation, it cannot be stressed enough. You have to have the documentation. If you don't have the documentation and you get audited, well, you're going to lose. One of the big things now is people traveling off reserve. You don't get to claim the GST. I've worked with a couple First Nations, again, depending, and they were assessed a bill for claiming all the GST on their travel claims off reserve, okay? Again, we would have to go nation by nation to understand why that is. You're as a public service body rebate, you can claim a portion, but or do you have municipal status? And we'll get into that on how you can apply for that as a First Nations government. The document has to be submitted to support the claim, okay? And sometimes they do audits, they spot check. And I mean, processing claims is complex. You can imagine, you know, if you've got a $150 billion budget a year, 150 million, you know, we've got to make sure that our record keeping, our software is set up right from the beginning, that our staff understand what's exempt and not exempt. It's not like the old days where, oh, I'm First Nation or I'm an Indian, I am exempt from taxes. It's not like that anymore. So the challenges and issues faced by First Nations, yeah. Clearly, tax exemptions are very complex and case law is changing it. And it's up to us to be on top of that. And the layers of taxation in Canada and per province and Indigenous land versus non-Indigenous land, it varies from province to province. It varies to what they've negotiated. And legally, yeah, again, it varies. You see tax treaties versus rights and titles versus self-government agreements, and it does create confusion. So has your nation, you've got to ask yourself, signed any agreements that affect your tax exemption? I was working, I had an employee from NISCA a couple years ago, and she was really upset because her wages in another nation were not tax exempt. NISCA has since the year 2000, when they signed away their tax exemption rights, has recovered them under the Liberal government. So it was very hard for her to understand how her leadership could do that. And it's about good communication, okay? So it's hard to access benefits. Confusion over the tax laws, you know, hinder First Nations to access those benefits they're entitled to. And if they don't understand, sometimes they let it go, and all of a sudden I'll be working in a community and these GST experts will come in and say, hey, we can get you all this money back. And it's you know, thousands of dollars. I'm not talking about, you know, $500, or I'm talking $100,000, I'm talking $200,000. And then they take like a 50% commission. No First Nation can let those tax dollars slip away. You know, we're marginalized on the reserve a lot of times. The infrastructure, if you're away from the larger centers for the more rural First Nations, you can't afford to let $1 slip away. So it's really important. It's worth a pound in flesh to pay that tax specialist, your CPA, up front to make sure that you've got the proper system set up. And it should be checked annually, and that you're claiming the proper GST and those sorts of things, so that money isn't walking away. So I do want to touch briefly on the types of business structures. And this chart is courtesy of BDC. It's right off their website, Business Development Bank. You know, it's very, I try to use resources that everybody has access to, but this is important. Okay, so a lot of our people were sole proprietors. And what does that mean? It means no separate entity. We are the owner of the business. We go out, we sell our beading, We go to trade fairs, we sell our clothing, our moccasins. It's us. We have total control. The profits come to us, and we're liable. We're liable for any debt or anything, and we're also liable for the taxation. Okay? It's a business schedule. It's called the T2125, and the assets are owned by us as well as an individual. Partnerships, there's no separate entity. Now that can be debated. I won't get into that. I'm trying to keep it basic here on restructuring with LLPs. But if you just decide to form a partnership with your mother, your aunt, your uncle, your son, okay, then you guys are the two partners. You need a partnership agreement. It determines control and who's responsible for what, and if anything happens to one of you, what happens with the partnership and the assets. So there's no, disagreements in the family afterwards. And the profits are paid to the partners as per the agreement. And the partners are responsible individually and collectively for the debt. You are individually taxed according to your percentage of share interest or earnings, okay? It goes on that business schedule again. It's just split. Say you're 50-50 partnership, it gets split 50-50. And the assets are typically jointly owned, or they are, you may have assets under the line that you contributed as an individual. There is flexibility for that. Then we talk about the corporation, the legal entity. Corporation shareholders are the ownership. The directors and shareholders have control. Okay, profits earned by the corporation. Dividends can be paid or wages. And there is a tax difference there, but we're dealing with GST today, just an understanding. Debt is paid by the corporation, and the corporation is taxed separately from the owners. Okay, the corporation is taxed on its net profit, and owners are taxed on whatever income the corporation flows into their hands. All right, so and business corporation, the assets are owned by the corporation and shareholders, basically. Always have an agreement, okay? The same as, partners and proprietors, and have insurance to cover if anybody passes away or disrupts the business, okay? GST applies to all of these entities just as tax will apply at different levels. The GST is more straightforward. It's that 5% again, if applicable. So what is the economic impact on us? Okay, it's essential. For example, I'm going to use Westbank First Nation because in the 70s, even before we came out with these new self-governing agreements, and that Westbank First Nation really set the tone. The economic impact of them administering their own taxes, it allowed them to build, a really modern infrastructure. It allows them to build their sewer water, maintain it. It was vital for them to expand and grow to the state that they have. Sometimes it's an impact benefit agreement, and it will have taxation effects. For example, some of the more rural Indigenous communities have signed mining agreements and saying, okay, we'll do this with you. It has to be a minimum of 25%, 50% Indigenous hired. It's got to be, and it's on reserve land. So again, the recovery of GST to increase employment, increase economic infrastructure, and increase community infrastructure is significant. And the growth can explode. We see Westbank First Nation as being so developed. You see down south, Tawasin, Tsleil-Waututh, you see all these nations, and they're just doing phenomenally well. In British Columbia, especially, focusing on that. And Westbank First Nation, just for example, they use their 5% for infrastructure, housing, social buildings, library, museum. It was huge. And sustaining development, like anywhere, there is some contribution. Now, in our Indigenous culture, we don't like the word tax. Let's call it a community fee. But for sustainable development, hospitals, healthcare, libraries, museums, schools, seniors' homes, we have to contribute, all of us. And we don't have to call that tax. We can call it a contribution and, for the common good of the people. So barriers to accessing these benefits, okay, bureaucratic challenges. Yeah, we know that. The Indian Act is a huge hindrance, and that's why you see, self-governing. And it takes a long time, though, to build that government. For 200 years, we've been under colonial, and it doesn't quite fit, not one size fits all. A lot of times we don't have the infrastructure. So for example, like GST, like income tax, personal incomes, like corporate tax. So we're relying on the government of Canada and us in partnership with them, on their system, because we haven't built that. I don't know what that looks like in the future as we're in Truth and Reconciliation and we come together. It's really hard, have 4 different levels of government operating in Canada at any given time. And it will be interesting to see how that evolves for all of us. Okay, we have to look at the barriers. We have to address it in order to access our tax benefits, our own well-being, our sustainability, our sovereignty. So government policies and support. Support for First Nations. We actually do have a lot of support with the government on this. That's been my experience. There may be out there those that haven't had that experience. Maybe there's a lack of resources. When COVID hit, all of us lacked resources, and we learned to try to be patient with each other. So there are government resources, to help us navigate that. There's an Indigenous team put together that helps us work with our governing council bodies, and we do need our legal representatives. History has taught us that we thought we were negotiating on nation-to-nation levels, and that was not the case according to the colonial government that first settled here. But we are moving forward in Truth and Reconciliation, and we need to work together, have access to those resources to navigate these tax systems, because we don't have the infrastructure ourselves, and to build it, we might not be able to, maybe we can. We have for personal taxes, and your GST tax credits, you have the Community Volunteer Income Tax Program with Canada Revenue Agency. You get your GST rebates. So we're not just talking about GST on a commercial basis. The thing with Canada is, if you want those rebates, you want your GST rebates, you want your child tax benefit rebates, you have to file income tax returns. It proves, that you qualify for them. It's an income means test, I guess, if you will. Business entities, again, reach out to your experienced tax practitioner if it's not clear. As I said, it's worth an initial consultation. If it's clean, cut, and dried, you can probably carry it from there. And then the GST guides are all available online. But which one applies? You have to know what system the nation is under that you're working with or that you're part of. These initiatives, they enhance the understanding of GST or FNT, FNGST. Which tax model applies and when? So collaborate with your community, memberships, BC Tourism Association, relationships, networking. BC Tourism advertise for you. Are people coming to tour on the reserve? Are they staying? Are they required to pay GST? How about networking? Your bank, your lawyer, your mentor, your insurance, your CPA. You need the 5, right? You need your bank, your lawyer, your mentor as a lifetime, and your insurance specialist. And insurance, just so you're aware, is exempt from GST. And you need a CPA tax. In this ever involving difficult layered tax community, we do need specialists to help us. And legislative authorities, of course, CRA for taxation, education updates, understanding taxes. And they do have free videos and workshops. Once you've nailed it down, if you're very comfortable with where your community lies, you can keep up to date fairly easily. If you say, no way, my tax specialist is going to deal with this, I'm not going to be involved with this, perfect. But you do have an obligation to be aware and up to date. And if you don't stay current and file your taxes correctly, your GST included, the financial impact can be quite devastating. In some cases it might just be a small issue. So the importance of collaboration is lots of times, for example, BC Indigenous Tourism or whoever you're a membership with, maybe your membership with governments, nonprofit governments of Canada, or whoever it is, your professional body that you refer to, AFOA, British Columbia. It's important because they offer great resources. They keep you current and you get to meet there with others and understand what they're doing. Does it apply to you? Are there alternatives? This is what worked for them. Will it work with your First Nation? Will it work for you in recovering your GST? So collaboration and communication between communities, you know, it's huge because there's information sharing. So future policy directions, we have to work together. And one of the things is, you know, we could ask our government officials, our band council, our AFOA Canada, or AFOA British Columbia, AFN, look, you guys, can you please talk to the government, make the tax system more straightforward and manageable, make it simple for all of us, you know, as we're working together through Truth and Reconciliation now. Communication strategies, I feel like sometimes we get consultation and sometimes we don't. Sometimes it's stuck at certain levels, and again, appeal to your authorities. You know, write a letter. I want to know, you know, use your voice. How are we doing this? What are we doing? But you have to get involved. If you don't want to get involved with your leaders and your community, then do we have the right to complain? I'll just throw that out there. I'm very supportive of our leadership because it's a very difficult position to be in. So much change, and you know that they have to keep on top of, and then they have to deal with us members, and we're pretty demanding. I think we're more demanding than the mainstream Canada because we've suffered for so long, you know, so they take on that extra, okay? The biggest thing is the policies have to make sure that for First Nations, for us, we have fair and equal access to tax benefits. And how do we do that? Again, we have to file our tax returns so they know. Okay, that helps promote social and economic equity, but also, you know, what are we paying fees? You know, we never expected 200 years ago for everything to be free. We actually would come together and help people in our community. We knew, you know, we knew what to do. We had our own system set up. And now it's just different, you know, the money, you know, this paper currency has sort of taken the place of food like salmon, berries, furs, those sorts of things, tools that we would, you know, share with each other and help set up. So try to be open-minded, try to look at positive ways to move forward. How do we influence our leadership to make policies that are far more simple and manageable? It's just gotten way too convoluted. Okay, and this is where we were talking about earlier. Know your First Nation or your Indian band. This is the Revenue Canada website. Of course, they don't give you any assurance on it. You know, GST does not apply. This is their policy, CRA policy, to the First Nations GST, meaning if we're managing it ourselves, we sign that agreement, that tax administration agreement, or First Nations taxation. Okay, you really have to know and read. And here, look at this, Tawasan, right? Now, this is the policy, again, the direct link. It will calculate for you. If you're wondering, if you're doing, say, a cost benefit analysis, am I going to do business on reserve, off reserve? This is a great sales calculator tax. So this is on sales calculation rate on the amount of sales, 5%. GST in British Columbia, 7%. This is reverse. If you've included GST in the sales, this backs out what the GST would be in the PST. This is a huge resource tool for you guys. If you're wondering, okay, how do I calculate my GST and make sure I'm cost effective, I'm recovering it, I'm remitting what I'm supposed to or not supposed to. the assumption just made here is the GST for British Columbia is 5% and the PST is 7%. Okay, it may not be applicable if you have if your community has a tax agreement, you're selling on reserve for your community. This might not be applicable, but I thought this was a very useful tool for small business to calculate your taxes, your GST. And if you're exempt, there it is, okay? So who does the exemption exclude? Self-government agreements, self-government refund, individual First Nations of self-governing First Nations, have they opted out? Certificates, per GST, HST notice 238. The next slide, I'm going to show you some examples, some members. Now, who does it apply to? Band empowered entities, corporation, board, council, association, society, service organizations, tribal groups, all right? But you have to read the policy and make sure and take into account all the different circumstances. So when we apply this Revenue Canada's policy under Section 87 of the Indian Act, well, what we do typically, our accounts payable department and finance department will type this letter of certification. This certifies that I am exempt from GST under Section 87 of the Indian Act. As I am not a treaty beneficiary of a First Nation with a final or self-government agreement that ends tax relief. So this would be the purchaser, say it's Loris Milkameen Indian Band. This would be the signature of the CFO and the registry band number 598. All right? And then what you would do, the suppliers would say, okay, I need your certification to show that you're tax exempt when I deliver goods, and then you will send this certification to them. Okay? So supplies made to Indians, we'll just touch on Indians, Indian bands and band empowered entities and what the supplies includes. Property, intangible property. What's intangible property? Well, goodwill, patents, licenses, things that intangible, not like a dump truck, not like a physical asset. Artificial intelligence, there's a draft publication coming out through the Accounting Standing Boards of Canada, and they do want Indigenous input on this, on intangible personal property and the impact. We're getting so many different types of accounting standards for different assets. It's hard to keep up again. Memberships, okay, leases, licenses, similar arrangements, importations, are we importing from the US or not, services, and the exception is the GST 189, and that is that travel plane for your vehicles. And this is the guide you can refer to. So intangible, let's just take a closer look at that. It's not a physical object. It cannot be delivered to the reserve. Do I have to pay tax on intangible property? Okay, so it gives an example here of a ticket for a concert. It's on reserve. So you don't have to pay GST if it's on reserve, okay? The supply of software. So I work a lot remotely from home. It over the internet will be considered to be situated on a reserve where the Indian purchaser lives on a reserve and the software supplier establishes the software is downloaded onto a computer on the reserve. So just so you're aware, if you're working on living on the reserve, that's a good one for the software. Where the Indian band or entity registers an employee to attend an off-reserve conference for band management activities, the conference fee and the right to attend the conference will be relieved of tax provided a certificate is given to the conference later. So really, really important. And I don't know that everyone's complying with this. We should be, I guess, when we fill out the application and we get approval for chief and council. But I think the government, we're in a place where we're struggling, we're in heavy debt, that the government's going to start looking in more and more ways to recover money to meet the demands of society and pay off that debt. So I just did here something really easy. It's not, don't get afraid of. If you think it's a huge case study, it's not. It's a very simple practical application. Okay. It's a GST rebate. It's a public service rebate, or is it municipal status benefits? And this is important. Okay, this is changing. A public service body rebate, generally speaking, is entitled to only 50% of the GST. If the First Nation has municipal status, it's 100%. Now, or if they're self-governing, it's 100%. Okay, so it doesn't mean municipal status in the traditional sense. It's just municipal status in terms of government body. And what you do is it's based on funding. If your funding is from a, the majority portion of your funding is from government agencies, all right? You aren't signing away any treaty rights, you're not signing away rights and titles, and you're not signing away self-governing rights if you apply for municipal status with Canada Revenue Agency. It's strictly for recovery of taxes. So here's the rebate criteria. The public service body rate, as I said, it typically includes nonprofit, charity, First Nation. First Nations that are not self-governing, not registered as a municipality, or not registered for the FNGST and FNT. So it's easier to identify those that aren't, by process of elimination. So the eligibility requirement is that you meet specific requirements related to your financial and operational status, all right? And that means powers and responsibilities. Municipal status provides the First Nations with, powers and responsibilities similar to those of municipalities. Well, what is that? Well, you're responsible for the infrastructure, the water, taxation, property taxation, in some cases, not everybody, but your funding, your governance. You have to maintain the roads, the education system, the hospitals, the healthcare system. So financial management, it impacts your financial status, management, and it includes rebates for grants and other resources that support community development. Okay, you're not a profit-oriented enterprise, all right? GST management, that's handling, we're going to just look at how municipal status influences First Nations' ability to manage GST versus public service body rebate. So here's a very simple calculation. If you have not applied for municipal status, public service body rebate is a form G66, GST 66. On line number, your rebate factor is only 50%. So if you paid $16,000 in GST, you only get $8,000 back. If you are a municipality, it's still the GST 66. Line 300, you get 100%. So if you paid $16,000 in GST, you get $16,000 back. So it's pretty easy here to see how quickly. If you're self-governing and you've signed that tax agreement, just because you're self-governing doesn't mean, 100% yet. We still have to check the criteria. Line 309, rebate factor is 100%, 16,000 paid out, 16,000 recovered. So you can see the huge difference and why it's important to know, because $8,000 goes a long way for our communities. Okay? So just basically a summary of today. So the municipal status of this case for First Nations gets the highest rate of return of 100%. The public service body rebate is less, it's only 50%. So by applying for municipal status, establishing self-government agreements, or registering for the FNGST or FNT, the immediate benefit is 100% recovery of GST if it's paid out. So this is where it's really important to know and to let your staff know. It is very difficult and it's beyond the expectation to advise an accounts payable clerk to determine if you recover 100% GST or not. Not all, but typically the CFO should be working with chief and counsel, getting these agreements and making sure the maximum rebate is getting it, okay? So that all of that results in significant cash flow increases through recovery of the GST paid. And these may not be applicable if the banded part entity or individual is doing business on the reserve under Section 87 Act services and products, okay? It's a bit restrictive. So, you know, our little case study there, what are the lessons learned? Well, navigating Canada's tax laws are numerous and very different for each nation, province, municipality, not one size fits all. We knew that. So it makes it hard. You can't just say, oh, this nation's doing this, why can't I do that anymore? Successful strategies, well, first of all, you have to plan and you have to understand. You have to understand who the nation is that you belong to or that you're working with, what kind of agreements they've signed with the government. You know, are they self-governing treaty rights and titles? Have they applied for municipal status? You know, are they under FNT or FNGST? It's complex. So follow it through, talk to your tax specialist. Maintain those records, I cannot say enough. You know, I know people, they put check recs in right away and then, you know, you feel like you're the McDonald's of check writing. Well, you have to establish your internal controls, have educational, short, no more than 15-minute presentations, PowerPoint slides that they can tape on their desk, 3 slides max, say this is what you have to do and this is what I need, or you don't get reimbursed, you don't get advances, those sorts of things. And keep informed of what's happening in the future. How do you do that? With your memberships, AFO, AFN, Union of BC Indian Chiefs, you go to these meetings and you keep up to date, okay? You also can have automatic emails coming from Revenue Canada if there's changes. You also, if you watch the budget meetings, our political government and what they're submitting and the impact, you can read that and you can get the short versions that are analyzed by a lot of the CPAs out there, the CPA firms, and it's all over the news. You have to keep apprised. It's really important to protect yourself that way. So, conclusion. We talked about the unique challenges of navigating the JST and HST, depending on your status as a First Nations government. Are you, again, treaty? Are you rights and titles? Are you self-governing? You know, do you have point of sales rebates like Ontario? Do you have fuel rebates? Do you have carbon tax rebates? Depending, are you the Yukon? Each province is different. So know geographically, know who you're working with, and first thing you want to do is understand, do they have tax agreements, administration agreements with Canada Revenue Agency, self-governing agreements with the Government of Canada? So opportunities for growth. You know, you want to know the legal framework because you're growing. First Nations business, for example, is largest growing. Like they're doing very well. You know, I'll use especially in British Columbia, but across Canada, you want to capitalize on those tax exemptions if you can, leading to economic development growth. For example, many of our nations in British Columbia, we manage our own property taxes instead of the province of British Columbia doing it. We have taken that over and we use that money to joint projects to manage our infrastructure. I'll use Penticton Indian Band as an example, the airport, water, sewer systems, those sorts of things. And we talked about the legal framework and support. Okay, be familiar with the legal framework, you know, to support what's crucial for improving outcomes for First Nations. So if you have a huge housing project, 99-year leases, that you're selling and passing along a tax exemption to buyers, or you structured it to make it, you know, more affordable, those sorts of things, then you want that legal advice and you want those professionals helping you out on that, and that is there. So that concludes. It's a bit long on GST, but as you can see, there's many different information laws, FNGST, FNT, that can impact self-governing agreements, that can impact your status as a First Nation. So if you have any questions, please, by all means, email me. I hope you like and subscribe to these educational seminars. It helps me know what is needed. Email me if you want to cover any specific topics. I do get requests and I try to do that. Next, after this, we will be, I promised you after personal taxes, we would start hitting corporate tax. So we're going to move into the corporate world. Have a great day, everybody, and we'll talk to you soon.